So we have our first presentation this morning.
This conversation will focus on transitioning from legacy banking to digital systems. As we know, the world has changed. Banking has changed. I'm aware that at Zenith Bank, you can actually request for your debit card from your ATM machines without having to enter the banking hall, which is quite incredible.
And you can also open
remember
your
the
account,
days where you have to queue, fill the form, sign, come back in 3 days, oh no, 3 working days. But things have changed. So we'll be looking at that transition from legacy banking to digital systems. And this will be taken by a senior partner leading LEAP business building practice in EEMA region. He has extensive experience launching new digital ventures and driving large-scale digital transformations. He organizes annual digital summits in the region as well. Now, prior to moving to EMA region, Tarik was with McKinsey's Silicon Valley office, where he led McKinsey's iConsumer initiative, understanding digital behaviors. Ladies and gentlemen, with a very warm round of applause, please let's make welcome Senior Partner McKinsey, Tarik Alatovic, for his presentation on From Legacy Banking to Digital Systems. We are honored to have you here. Thank you for joining us.
Okay. Thank you very, very much. First of all, I will say it's a real honor to be here today. I have a huge respect for Zenith Bank as a global institution, as it's recognized. And you have really built something special here for Nigeria and for Africa. I'm also always very much energized every time I come to Lagos. I really think in Africa, this is the epicenter of entrepreneurship and innovation and building new things and leapfrogging. So thank you for that. I will pick up on some of the themes that Brett was talking about. I'll probably just have a slightly more near-term perspective, but very much the same themes, even some of the same examples that you will see. Let's hope the tech works for us. If you can go to the next page. Yeah. So first of all, as Brett was talking, disruption is only accelerating, and it's everywhere. We have more people online. So today we have about 5 billion people on the planet that are actually online. If you look at Africa alone, in the last decade, 300 million people came online that were not there before. So it's a huge opportunity. There is much more data. There's this tsunami of data coming in. And customers, they're actually more demanding. Their expectations are shaped, by likes of Amazon, by likes of Uber, and they expect similar from the banks. If you go to the next page, I'll just gesture if the people in the back can follow. So I think Jim Ebenezer also talked about, where is the value being created. If you look at the US top companies, the top 5, they're all tech companies, right? Even Tesla, which is a car company, but it's really a tech company, right? It's a computer on wheels. The value, the market cap of those 5 is actually greater than all of European and UK stocks together. Just those 5 companies, that's how much value they create, sort of driven by tech. And even, by the way, for them, success is not guaranteed. I was actually redoing this slide before this presentation. There used to be Facebook there before Tesla, right? We had to switch because Tesla is innovating even faster. So there is no guarantee. If you look at where big tech is investing before we get to the fintech, so also the big tech, so the Googles, Amazons, Apple, Facebook, they're also looking for the new areas of disruption, and all of them are actually looking into financial services. That's why you have Apple Pay and Google Pay and Alipay, right? So that's another area where technology is increasingly touching everything that we do. If you then move ahead, if you look at fintech, I get lots of questions from founders of the fintechs, should we be worried, there is a drop in funding, and obviously it's painful as it is right now. But if you put it in context, 2021 was an extraordinary year for fintech funding. If you look at 2022, we're actually still on the track to be, like 2020 and before, right? So even though there is a drop versus the historic high in 21, and there is still actually plenty of funding and plenty of innovation happening with fintechs. If we move to the next page, so if you just, to put this again in context, in 2017, so only 5 years ago, there were 25 fintechs, 25 unicorns, with a cumulative valuation of $77 billion. Today, even after the drop, right, you are at 275 unicorns with a cumulative value of about $1 trillion, right? So it just gives you the idea of the extent of change. And disruption is actually happening all along the financial services value chain, in account management, in lending, in payments, in capital markets, in retail, in commercial, in different areas. By the way, it's not just the fintechs that are innovating. Because of the fintechs, many banks that are digital powered, Zenith is a good example of that. You're also sort of innovating in a big way. But there is just this wave of innovation and disruption happening. If you move along, just to give you a bit of perspective for Africa, if you look at globally how much of fintech revenue comes as percentage of the overall financial services revenue, globally that number is about 3 to 5%, if you're in US or in UK. If you look at Africa, it's actually more than that, right? So when I talk about Nigeria being a great innovator and entrepreneurship and leapfrogging, there's actually real evidence for that. And in fact, it's only accelerating. Now, Brett spoke also about this, but going beyond banking and going to where the customers are, you already have a number of examples. Here's a China example, but you will see it in the rest of Asia. You'll also see it in developed markets. The leading technology companies, they're getting organized by customer need. And while all this disruption is happening, one thing is actually not changing that much, and that's fundamental customer needs. People need to eat, they need to transport themselves, they need to be healthy, they want to get entertained, right? So where lots of innovation is happening by technology companies and increasingly financial services technology companies is being there where the client is. So the example that Brett used in Metaverse was, let me say, an extreme example of that. But there is many things that you can do today, right, to actually act on that vision. If you look at, example, for example, from China with Alipay, they have this Alipay wallet, which is very, very important. But on the back of that, they're able actually to do credit scoring, issue credit to individuals, to SMEs, manage wealth management, create a real sort of ecosystem around that. You will hear, also terms like, super app, increasingly getting lots of attention. If you move ahead, Revolut, that Brett also spoke about, it's another example of that. Started as a fintech, digital banking, but then actually moving in a range of sort of ecosystem services, being there where the customer is. And that's, let me say, one of the broader trends that we see. Now, if you look at where is the value being created by financial services companies, one thing we do as McKinsey, we run this global banking annual review. So every year we look at who is growing, why, where is the value created. And if you look at the 4 categories here on this page, at the bottom is your traditional balance sheet banks. Then you have some niche and specialist financial institutions, capital-light players, and fintechs and neobanks. And where you see more of the value being created, it is with the fintechs, but also on the banks that are able to digitally transform. Right? So this bucket of traditional banks, there is a huge, huge amount of difference. There are some really well-performing ones that are able to digitize, and there are those that are well behind. I love the quote on the previous page from William Gibson, the future is already here, right? It's just not evenly distributed, right? So there's those that are able to act on it fast and, make the disruption happen. Now, if we move ahead, to share another quote from Jamie from JP Morgan, we cannot overemphasize the extraordinary importance of new technology in the new world. We are still at the beginning of the journey. There simply is no speed fast enough. And that's, what I think is really important is kind of visionary leadership and support, that you're getting, from the chairman, from GMD, from the EDs of the bank, in order to move the bank to actually embrace the change and be able to move very fast on the digital front. Now, if you look at some of the metrics of what I would call digital-powered banks and fintechs compared to the traditional banks, you will actually see big differences in what's possible. So the first column here is, let me say, an average universal bank. This is global averages, right? It will differ from market to market. But you will see the ones that are digitally powered and fintechs are able to grow faster. They get more of their revenue from beyond banking, from the ecosystems, the examples we shared earlier. They will have much more of their sales being done digitally end-to-end. And the cost to serve, they're able to do it because it's largely automated. It's a much lower cost to serve. Now, how do they enable that from tech perspective? They've organized themselves with the modern engineering practices, agile ways of working, where they can do many releases, 500 to 1,000 releases per month, right? The time to market is in weeks, not in months. And if you look at the shape of the organization, actually shifts much more to digital and to analytics, right? So the shape of the companies is also going to change over time. I think, Brett, you used the word of, technology company that does banking, and many of the sort of leading banks are sort of moving in that direction. Now, if we try to unpack this a little bit, so what does this mean in terms of how banks, the leading banks, can organize themselves? So there is 5 key shifts that we think are needed. One is, and I'll just talk about the 2 shifts, having IT and technology as a core capability, with business and IT jointly organized in professionalized product teams, adopting agile. Brett, I think you used the example of Nubank and versus Itaú. If you look at Itaú, driven by disruptors like Nubank, what they've decided to do internally is organize themselves as a bunch of startups. So if you talk to Itaú, they'll tell you, oh, we are shifting to an organization of 50 startups. They're trying to rethink how to organize themselves for speed and agility and modern tech. So if you look at then banks, the way they're pivoting, they'll have these agile teams that are creating digital experiences for the different journeys in everyday banking, lending, insurance, commercial banking. There's platform teams, the enabling technology, and then organized by a layer of sort of cloud-based services that you can innovate rapidly on. We can move on. From the talent perspective and the spend perspective, what's also important is there is a big shift from run the bank to change the bank. So much more of engineering talent being basically focused on those areas, and ability to attract, higher people with higher sort of engineering competency. So you see a big shift in sort of how the IT budgets are used. If you move on, and if you look at from the way the teams are organized, idea is to create much more empowerment. So basically sets of agile teams and units. So moving from a more hierarchical structures to a number of sort of agile teams that are able to operate at speed. When it gets to tech platform, many of the banks are basically moving to update their core platforms, core banking systems that are much more sort of cloud native in nature. And the idea is just to be able to keep up with the pace of innovation, so you can enable APIs and ability to integrate and ability to innovate fast. On the data side, we published this paper last year on the AI bank of the future. And the idea is, if you're going to move to the banks, where you have hundreds of data scientists and data engineers, rather than hundreds of people in the branches, you do need to organize yourself as the bank differently. And then the question then, what are the building components for this AI bank of the future? And it will include elements on customer acquisition, credit decision making, but powered by the underlying AI capabilities, machine learning, natural language processing, blockchain, facial recognition, number of techniques that are needed. But the bank that you need for the future, is different. On the cloud side, GMD, Ebenezer spoke about that as well. We see a big shift on much faster adoption globally of private and multi-cloud infrastructure. And then if you look at the numbers on the right-hand side, in terms of improvements from migration to cloud, those are substantial in terms of downtime, number of total monthly critical incidents, time to market. It's a key enabling infrastructure. Now, what are we trying to do overall? So you have all of this enablement. What kind of digital experiences do we want to enable? So if you look at the numbers, and these are global numbers here from 2016 to 21 to the next horizon, when we look at degree to which a bank is digitized, we look at basically 4 elements. We look at digital sales, so how much of your selling that you do as the bank is done digitally. And globally, that's, let's say, at about 30%. Right, this is a mixture of developed and emerging markets. Next horizon could be 80%. We look at adoption, we look at the customer engagement. Are you able to, do your customers log into your mobile app frequently? What do they use it for? And then the conversion in terms of ability to offer a range of services, both banking and beyond. And if you look at this, true digital experience, there's 2 elements that you need. The first one is on sort of digitizing, so capturing the first 50% or so of your digital users, and that's having brilliant basics. So full range of servicing capabilities, daily banking options, full product suite, just good in-channel execution, good CRM, all of that. But if you look at the next gen, where lots of innovation is happening now, it's really moving to the mobile first everywhere, end-to-end acquisition, let me say sophisticated personal finance management, PFM, beyond banking features, AI chatbot, I think there was some talk of that today, etc. But just to give you an idea where this is going. We can move. And then last thing I would leave you with, what is that playbook, for the banks on moving from this legacy to digital transformation? There's basically 6 elements. One is having a clear strategic roadmap. What's the vision that you have for the bank? What's the business case for this digital transformation? And then, critically, talent, and lots of the talent sits in this room. So how do you attract more of it? How do you upskill it, etc. Agile organization, so ability to move from hierarchical structure to more of the empowered teams. Sort of, how do you change a corporate to a startup-like culture and setup? Underlying technology, so cloud, DevOps, etc., and data. And lastly, adoption and scaling. And last thing, idea I would leave you with, just for the people in this room. As I mentioned at the beginning, 300 million people came online in Africa in the last decade. There will be another 30 billion US in fintech, financial services, technology revenue in the next, by 2025. One of the industry guys, described it not fintech disruption, but fintech eruption. So I would just say this is the moment for technologists, for entrepreneurs in this room, right? And I love what you're doing with the Tech Fair and sort of, building that next generation of entrepreneurs. Thank you.
Thank you very much, Tarik. Once again, a round of applause to Tarik Alatovic. Thank you so much for that. I don't know how you do it, but you're able to put so much in such a little time.